Relieved to see a positive day on the Aussie share market. In 2014 so far, we've seen 9 sessions before today, and 7 of those sessions were actually negative ones. So nice to see our third day of gains for 2014, and after 3 sessions, we've finally seen an update. We have seen all sectors trading high, but the standouts were clearly the consumer discretionary as well as the property space. And I guess what we have seen are our markets around the region doing quite well. We've seen the Japanese market up by 2.2%, the Korean market up by 0.3%, the Hang Seng in Hong Kong up by 0.3%. But one market that has bucked the trend today is the Shanghai Composite. We have seen the Chinese market down by 0.8%, and there have been reports that 7 of the provinces in China actually downgrading and predicting lower growth for 2014. So that's one of the things they're watching. We know that's one thing that the market has been concerned about, and a key reason why the Australian market has been underperforming together with the material space. So keeping a close eye on China, they're predicting around about 7.5% growth for 2014. But of course, with the GDP numbers out very soon, that will be one of the big events for the Australian market.
Of course, a key performer today up 14%. Is this all short covering, or is there more to the story?
I think when you see double-digit returns on one day for a company, you have to think that short selling does come into the picture. And if we have a look at Oz Minerals, 7.5% of the stock is short sold, which is quite a large amount. It's the 22nd most short sold stock on the market according to the latest ASIC reports. And I guess if we have a look at the short position, they've really been building since December. And on December 11, when they gave their last update to guidance, that's really when we've seen the shorts increasing. On the 11th of December, the stock fell by 14%. Now, before that date, short positions were at about 5.8%. One day afterwards, it was at 6.3%. And then by the end of December, short positions had built to 7.4%. So you can see that the short positions have been building. Today, we did see some confidence returning, the numbers coming in at the upper end of guidance. And, 2014, we're going to see increased production compared to 2013, and also costs decreasing. The fact that we're still seeing the cash balance relatively strong, I guess a positive for Oz Minerals. But the other stock where short covering really came into it is Paladin. 9.9% of the stock is short covered there, and it does look like they're still quite optimistic on finding a buyer for a stake in the Langer Heinrich uranium mine over in Namibia, and the stock up 9% there. So 2 stocks where short covering really did come highly into the picture. I guess investors have been quite bearish on Oz Minerals. The stock down 23% in the last 3 months. However, still, it's all about Prominent Hill, and this is still quite a difficult story.
Yeah, Michael, what do you think of it?
Absolutely, and at the moment, Fortescue's debt is junk bond status, and as it does move to the massive amount of free cash flow which is building, its accelerated production profile and reduction of debt is going to very quickly move to more investment grade, and that means interest costs will be falling. The fact that it's paid back this $1.6 billion worth of debt faster than expected means that its interest payments will be falling. And this is a stock, and this is a company where we are seeing a reduction in terms of the risk profile. We've seen CapEx already peaking. Fortescue's working very much and on target to reach its 155 million tonnes per annum target. The stock's up 15%, and it's been a great news story for Fortescue. I mean, 6 months ago, we were looking at the iron ore price declining, but it does look like we've seen stabilisation around that 130 US a tonne mark. So the stock doing very well today, up by 3.5%, and I suspect it's going to be a good week for those iron ore miners, despite the weakness and the stumble that we've seen in iron ore prices. And that's because we do start to see 4th quarter production numbers, and tomorrow Rio Tinto should be coming up with 4th quarter numbers. And of course, with the combination of relatively high iron ore prices together with the very strong Port Hedland statistics, means that it should be coming out with a pretty strong number.